Welcome back to the Crypto's Key conversation. I just wanted to make a quick little video. I want to cover a couple different tweet threads from Johnny Deaton and the Digital Asset Investor. Had put up a good little video here that I wanted to cover, and then Riz XRP had put up another video talking about like generational wealth that I wanted to cover as well. And then we're going to cover Watcher Guru's tweet thread here about Tether, and then Pomp had put up a little tweet here that says bear markets are for builders, bull markets are for speculators, and I wanted to kind of touch on that and give my 2 cents on it. Come over here looking at CoinGecko. We're currently sitting under $1 trillion market cap. We're currently sitting at $937.5 billion market caps, currently down 0.3%. Coming out here, Bitcoin sitting at 20,469, Ethereum sitting at 1,100, and then we have XRP sitting at 32. If we look at the 24-hour gainer, Celsius Network is up 47.3%, and obviously we know there's a lot going on with the Celsius Network and stuff. Synthetics Network 41.5%, Aave's up 12.1%, and so on. Coming over here to the Bitcoin Fear and Greed Index, we're in this 9 range, and this is the lowest I've seen it right here. Just yesterday we had marked a 6, and I think this is the lowest I've personally caught the Bitcoin Fear and Greed indicator at in this extreme fear range. So that's absolutely crazy to see. As you can see, there's still a lot of fear and uncertainty within the market, in our crypto market in particular, but now we're still sitting under 10 in the single digit at 9. So just a matter of time. Apparently they're saying there could be some more downside, especially when it comes to the tether not being pegged back to the dollar 1 to 1, and then you have the Celsius Network. We just had the Terra Luna and UST crash that happened. There's so much fear, uncertainty, and doubt within the space just due to these huge assets that are being affected, in these platforms that are being affected, and you have thousands of investors that's been affected from it, especially those being locked up right now within the Celsius Network as well. Speaking of some tweet threads we wanted to cover here, this is Johnny Deaton. He's saying expert reports have been submitted and depositions completed, but the last few weeks have totally proven XRP price is not driven by Ripple but by Bitcoin. So he's referencing kind of what's going on with this so-called expert that the SEC has in regards of talking about, he knows why XRP investors invested into XRP because they were saying that they were expecting gains on the backs and efforts of Ripple. When if you look at the charts and you look at the history, which there's great videos up, like Blockchain Backer, Moon Lambo have put up some stuff, and there's a couple other people within the Twitter community that have put up some images showing like XRP's following the market just like the rest of the other altcoins or the digital assets that are out there. They're following what happens with Bitcoin. If Bitcoin goes down, XRP goes down. Bitcoin goes up, XRP goes up. And that's kind of what's been happening. And it's crazy because if you're saying that XRP is tied to the efforts of Ripple, like there's been so many partnerships and, partnerships with companies and central banks around the world, corridors opening, now they're building their whole NFT platform, and you have ODL, and there's so many positive things, Ripple talking about after the lawsuit, they're going to IPO. There's so many things happening, and you would think that XRP price value would be so much higher, but it's still sitting. I mean, pretty much this is almost down close to my DCA since 2017. Since I've been accumulating since late 2017 to this point, it's literally down to my DCA, which is absolutely crazy. I've seen my portfolio rise, tremendously. Now it's all the way back down in relation to my XRP holdings alone, but it's way back down to almost my DCA, which is crazy. But if it's really tied to Ripple, why is the price not higher? There's been people speculating if the lawsuit didn't hit, currently right now at this point, XRP should be in, $2+ I think it was like $2.50 or whatever the case is. Even with the market downturn, clearly it's following what's happening. Obviously, you have the suppression and the holding back of the Ripple, the XRP or the Ripple and XRP lawsuit from the SEC, and there's a lot of other factors that's been suppressing the price of XRP as well. But it's just following Bitcoin in the market. That's what happens. He says Brad Garlinghouse announced ODL increased by 6 to 8x, and Ripple is hiring. So they have over $1 billion plus to hire more people, while a lot of these blockchain technology companies are freezing positions, freezing hiring, or retracting positions that they've offered out, and they're not just hiring in general, while others are laying off. That's what he's saying. Yeah, XRP price is pretty much going to crap. I mean, that's literally what it's at. It's back down to a lot of people's DCAs, which is crazy. Which, quite honestly, me being in this space, doing a lot of research in XRP, I'm kind of blessed that it's back down to this so I can accumulate more, and I have accumulated more since this downturn. So there's just opportunities there. But the point is if Ripple, the company, is 6 to 8xing, even with the SEC lawsuit, why isn't XRP 6 to 8xing, or why isn't it skyrocketing because of that? It's crazy. Brad Garlinghouse and them talking about, oh man, we've had, the best quarter over quarter, or we've had, our stuff has grown 6 to 8x or whatever case is, even with the midst of the SEC lawsuit, but XRP is still down. Hasn't even touched nowhere near its old all-time high back in late 2017, early 2018. Crazy, man. Tim says, hodl, the ODL XRP. Moving on here, Johnny Dean had put up something else. He's responding to Will Clemente, and this is talking about, we've been talking about spot Bitcoin ETF and how it's just necessary, especially, with all these different companies and corporations, throwing their, I guess you can say, kind of putting their name in the hat in regards to trying to get approved for a spot Bitcoin ETF like Grayscale, and you have, I want to say Cathie Wood, I forgot what the company's called, Cathie Wood and them, and you have others that have been denied a spot Bitcoin ETF. But Will Clemente says, so there's a now short Bitcoin ETF, a futures ETF, a closed-end fund trading at 30% plus discount, a 401k option for Bitcoin, but no spot ETF. It's clear that Gary Gensler and the SEC have an agenda against Bitcoin. Yeah, it's quite evident. Johnny Deaton says, it is absolutely outrageous that Gary Gensler and the SEC allow the institutional incumbents have a derivatives Bitcoin ETF and a short Bitcoin ETF while not allowing a spot Bitcoin ETF. Why the industry doesn't get together and coordinate lawsuits against the SEC is beyond me. And that's why I wanted to bring this up, is because we talk about even Jeremy Hogan. This Jeremy reminded me of Jeremy Hogan. Jeremy Hogan had, he was part of this interview that he had a great comment that he said. He was saying, we need to stop looking at each other and creating this divide amongst one another. We need to realize that we're all on the same team. And what he's referencing is us as, first of all, a decentralized community, investors in the space. But he's talking about the digital assets we hold. So whether you're an Ethereum, you're an XRP person, or you're a Bitcoin person, or a Solana person, or a Polkadot person, or whatever the case is, like, we need to realize that we need to stop putting up these walls amongst each other and realize that we're all on the same team. It's our industry versus the entire world. So we have to do everything in our power to fight the good fight and fight for what's right for our space. We need regulatory clarity in our space so this space can flourish and, blast off into the future, because we see the writing on the wall with it. So that's pretty much what he's saying here. It's like, we need to make sure we stand together, stop hating on one another, stop trying to throw shade at one another, and realize, like, if one of us are affected, especially when it comes to this Ripple and XRP lawsuit with the SEC, that is going to trickle down and just cascade into the other components of the market, the other digital assets of the crypto space. So as you can see, Gary Gensler and SEC are already going after platforms. They're already going after, lending platforms, exchanges, and other projects. You have Library in a SEC lawsuit as well. So all they're doing is trying to gain more power and more strength to go after, other projects and other blockchain companies and exchanges and so on. So we have to stick together and coordinate, like he says, coordinate lawsuits against the SEC and stand up for what's right and fight the good fight. 100% agree, and I love that, Johnny Deaton. Digital Asset Investor had put up this video, and I wanted to play it real quick. He says, how do you build a Web3 Ethereum, quote, trustless foundation for the planet, as Lubin says, when it was created with closed-door secret meetings leaked with regulators like the SEC, CFTC, and the Ethereum buyers in the ICO are disguised till this day? Centralized ownership, question mark? So let's take a listen in.
And so there is this other side to it, which is, at least the way I think about it, is Web3 is bringing trust to an untrusted network.
But he then, after talking to Grunfest in a fireside chat at the Stanford campus, made his way over to see Andreessen the next morning. And this is the part that now not a lot of people know. And he invited Chris Dixon to round up the sort of the industry players who were really kind of trying to do it the right way.
Right, but and look, there was trust involved. Like people had to believe that encryption worked, right? And so there were trusted components to what we built.
Just let me know. I can email them to you. They were supposed to be confidential and submitted to the SEC. Within days, they were public. In fact, as the newspaper reporters were calling me, I'm going, oh my God, how did that get out? And all of us were immediately reaching out to Andreessen Horowitz saying, we didn't send it, honest. But the really valuable work product at this point, and the reason I mention that is Director Hinman's speech that I'm sure everybody at least is familiar with or has heard about, most of what he says in there came out of the safe harbor as well as the meetings that we had with him.
But the big thing here that strikes me is just like this is an opportunity to build the internet, sort of internet phase 2, or Web 3 is like an opportunity to basically build trust into this untrusted environment and have people come out the other side of this being like, okay.
A person can buy from any number of different identities. We may limit the size, the unit size of a sale, just to make it easier to disguise. Let's say if you're a whale and you want some privacy, you can buy 50,000 units and so nobody scares people with an enormous initial purchase. So if you are a whale, if you are planning on investing several million US dollars worth, then you can do that for multiple identities.
You owned 10% of total ETH supply at Genesis. My question to you, given that we're going to be moving on now to proof of stake and where supply decentralization of Ethereum is so important, can you tell us how much ETH you and Consensus still control on Ethereum?
No, I wouldn't disclose that personally.
And so,
Yep, so that's that. I want to thank Digital Asset Investor for putting that up. Tim goes, ETHgate, $15 million free pass. So you're talking about William Hinman. Coming over here, Watcher Gruber says, Tether says it's preparing a full audit with a top 12 firm to provide more transparency on its USDT reserves. So here, I wanted to bring this up because I know that this was one of the big fears, especially with like TA guys like Blockchain Backer and people that are really following, these stablecoins, especially Tether being the biggest one. If we come over here, Tether being the biggest one, I mean, it's in the number 3 spot, at 47.2 billion, which is absolutely wild. Coming back over here. So I'm bringing this up because there's been a lot of speculation of, okay, well, it's been depegged from, its one-to-one backing with the US dollar for some time now. Is this going to be the next, Terra Luna crash? Is Tether going to follow the same suit? Obviously, you have all these other networks being attacked and crashing and going down. So they're talking about if something happens to Tether, I mean, what is that going to do to the market? We're going to have more downside. There's going to be mass chaos and mass sell-off and so on. So if Tether really does things the right way, which, the community has been screaming for some time now, is like, hey, if they do a full audit to where everything is completely transparent and out there and it truly shows that they are backed one-to-one and it's not just, as they say, commercial paper, that can be very, very, I think personally, in my opinion, it can be a huge catalyst, just a positive catalyst within this market. Now, if they still do their whole roundabout, like, we're going to redact certain things or, we're going to keep it in-house, that's really not going to do anything because there's really no trust there. So if they're truly going to do a full audit and it's going to be, completely, or if not completely, but, as transparent, that builds some trust, and it gets depegged one-to-one back to fully depegged, pegged, I think that'll be huge. So we're going to keep tabs on kind of what happens here. And I want to thank Watcher Guru for putting that up. There's a video here, 2 minutes and 13 seconds. But long story short, they're talking about pretty much generational wealth. They're talking about the difference between, you have the boomers and you have the millennials and so on. So without playing this video, I just kind of wanted to touch on it. I know for me in particular, I'm born in 91, so I'm a millennial, and I'm very different from, my grandparents and, my parents and how they thought about things. They were all, talk about, just saving. You work hard, you work, your entire career. You put as much money as the way you can into your savings and into your retirement. And then as you get to retirement, then you start living. That was pretty much the thought process. The crazy thing is my parents, I would say my mom and my dad's side of the family, they pretty much were like dirt poor. So they lived off the system, lived off welfare, lived off WIC, lived in government housing. There was just a lot of that stuff, projects and so on. So they never really lived by the model that they talked about. And I know for me in particular, through my education and just through, looking up to mentors and people that I looked up to, just kind of educating myself and especially being in this space and, being on YouTube, listening to podcasts about people that talk about, investing, wealth and all that stuff. Like I've learned that when it comes to me, I want to do things completely different from my upbringing, from what my parents did. And when it comes to, my kids, I want to make sure that I am setting them up for success in regards of, okay, I do everything in my power right now to accumulate what I can, educate myself, invest properly when it comes to this space in particular, build a portfolio so somewhere down the line, as I'm, ready to take profits or ready to sell, I'm going to be able to not only set, me and my wife and I up, personally, but like be able to, pass down some more wealth or some of that wealth that we've earned to my kids and so on, and educate them, and they can kind of start the cycle and the process all over again. So that's pretty much what they're talking about here. And they're talking about, you got to get in tune with the changing times. Us millennials and so on are, being brought up with the age of the internet and all these apps and all these different ways of making money and make it faster than, the typical 9 to 5. There's so many different ways and avenues of doing things, especially when it comes to this crypto space. There's a lot of opportunities if you just look at this market and you educate yourself on what's going on. And it's truly about educating yourself on projects, the people working behind the projects, what it has to offer, does it have true utility and use case, and just quite honestly, time in the market. I mean, and that's pretty much, the gist I got from this. I just kind of wanted to share that. I know for me in particular, like my goal is to obviously set my family up for financial freedom, as soon as I can and as effective as I can. Not saying that, I'm going to be some degen and try to get things overnight. There's small plays that I make for that, but like just long-term, solid, to the best of my abilities, educate myself and make solid plays so I can set my family up for not only wealth in my life, but generational wealth, leading forward. And, just like me, my family's going to have to educate themselves. I'm going to educate my kids, and they're going to have to continue to grow and educate themselves as they age, and then pass it on to their family or to their kids and their family as well. Coming over here, I wanted to touch on this. Pomp says, bear markets are for builders, bull markets are for speculators. Moon Lambo says, why can't both bear markets and bull markets be for builders? Why do you say only bear markets are for them? Dear T Dog says, group thinking is dangerous. It seems to me everyone is following a script narrative of how things must happen, as if everyone's parroting the same mindset they were programmed to believe. I find that very odd. But long story short, I wanted to touch on this because, quite honestly, I think both of them are right. I mean, the way Pomp's, throwing it out there is like bear markets are for builders, people that are going to accumulate, build their portfolio and, have their time in the market. And then, when the market cycle repeats or the thing goes up, because per history, if you zoom out, it's just an upward trajectory. So eventually you're going to be up. And then he says bull markets are for speculators, but technically both is pretty much speculation. There's really no regulations. We're speculating on these assets of they're going to have some staying power and they're going to go up in value and or whatnot. I mean, isn't most investment speculation? Obviously, certain assets, like real estate or whatever, you can look at data and say like, okay, over time, housing does this or that or whatever the case is. But it's truly speculation. You're speculating that, you're going to have, you investing, you're going to increase value and gain value in regards of your investment. But I agree with Moon Limbo as well. I think the bear markets and bull markets are for builders. Because I know for me in particular, being in the market since late 2017, I've learned a lot, especially in the bear markets. I've learned, first of all, I bought the top of the 2017-2018 bull cycle. I did. I mean, in every asset that I bought, especially XRP, I was pretty much buying the top, if not the top, very close to the top. And I've rode it through, the ebbs and flows of the market cycle, the bear markets and all that stuff. But I did realize as I kept accumulating as time went on, from late 2017 to this point, that I was truly building the solid strength and foundation of my portfolio. And now I'm to the point to where I'm at. Even though we're down pretty bad in our portfolio, obviously the market has been decimated as well. Like, we have a solid, when I say we, I mean my family, my wife and I, my family, we have a solid foundation and a solid portfolio for when this thing does go in the bull markets. We can take profit and, gain, a little bit more financial freedom and whatnot, all the good stuff, right? But still in those bull markets, you can still be a builder as well, getting involved. Like I educated myself about NFTs and I educated myself about different sectors within the the crypto space, DeFi and utilizing DEXs and versus centralized exchanges, educating myself on, self-custodying and different wallets and, being a part of DAOs and all that stuff. And that's all part of being a builder and constantly educating yourself and diving into the space to see what it has to offer. Because technically we see the writing on the wall when it comes to this space. This is the future. So I agree with both of them. You can definitely be a builder in a bear market and a bull market as well. And it's speculation. It really is. We're just doing our best to educate ourselves, to follow the right teams, to follow the right use case, to follow the right utility, and truly hope and pray that they truly have staying power when it comes to, the years and decades to come. So that's pretty much what I wanted to cover. I said I wanted this to be short, but I kind of went on my tangent and just kind of give you my thoughts on kind of what's going on. But make sure you subscribe. I'm really excited to grow this channel. I want to thank, the 143 plus subscribers that show some love and watch the videos. Make sure you come to Twitter and follow us at Crypto is Key One. This is where we, tend to retweet, throw out our thoughts, and kind of show you a little foresight what we're going to cover in the future videos in regards of our Crypto's Key conversation. With all that being said, stay strong out there. Be safe.